Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
We've got some important updates in the world of finance and debt markets to discuss. First up, Nexus Select Trust has secured a CRISIL A1 Plus rating for its commercial paper program sized at Rs 500 crores. This rating reflects a very strong capacity to meet short-term financial obligations, boosting its market credibility significantly. The rating is valid for 60 days and requires periodic reviews, so maintaining it is key to investor confidence.
That highest short-term rating means Nexus can easily access money markets for working capital, strengthening their liquidity and financial flexibility, especially crucial for a real estate investment trust managing commercial properties. Stakeholders should monitor financial performance and commercial paper utilization closely, as this rating is a benchmark of strong creditworthiness in the Indian real estate investment trust sector.
Moving on, despite 89% of Indian adults holding bank accounts and the Unified Payments Interface processing over 20 billion transactions monthly, about 16% of these accounts remain inactive, which is 4 times the global average for similar economies. Credit access remains low too. Only 15% of adults and 14% of micro, small and medium enterprises have formal credit, forcing most to rely on informal borrowing.
This gap highlights a critical challenge. While access has improved, active financial engagement lags, limiting the impact of digital payments and formal banking. Boosting credit availability and insurance penetration, currently at just 3.7% of gross domestic product, is vital. For India's goal of a $30 to $35 trillion economy by 2047, a leap in technology, policy, and infrastructure is essential.
Now to another key development. Knowledge Realty Trust's borrowing committee has approved raising up to Rs 1,000 crores through non-convertible debentures and another Rs 1,000 crores via commercial papers, totaling Rs 2,000 crores in debt. This is an enabling resolution, not an immediate issuance. Execution depends on market dynamics, and specific terms like coupon rates and tenures are yet to be announced.
This move enhances liquidity and working capital flexibility, aligning with typical real estate investment trust strategies to manage finances proactively and prepare for refinancing or expansion. Investors should watch for future disclosures on interest rates and tenure, as debt financing carries refinancing risks. But this signals strong market confidence in the trust's governance and asset quality.
Here's a significant update on banking system liquidity on June 16th. India's banking liquidity surplus plunged from Rs 1,61,636 crores to just Rs 23,881 crores, mainly due to advance tax and GST payments absorbing cash. The Reserve Bank of India responded by injecting Rs 72,300 crores through 2 variable rate repo auctions at a rate of 5.26%.
This sharp liquidity tightening reflects ongoing pressure from credit growth outpacing deposits, keeping system liquidity tight between 0.5 and 1% of net demand and time liabilities. Additionally, the RBI's special foreign currency non-resident deposit swap facility is designed to attract fresh foreign currency deposits from non-resident Indians, covering currency hedging costs to encourage dollar inflows, which the RBI swaps for rupees, boosting systemic liquidity and stabilizing bond yields.
CRISIL has put Inox Green Energy Services Limited's long-term rating on Rating Watch, with developing implications, keeping the rating at CRISIL A and the short-term rating steady at CRISIL A1. No specific financial details were shared yet, so the market needs to follow disclosures from Inox Green Energy and CRISIL's next reports closely. The watch status means credit risk could shift either way depending on unfolding developments.
That signals uncertainty in the company's credit profile, especially given its role in wind farm operation and maintenance. Investors should stay alert as the rating could be upgraded or downgraded based on upcoming developments. Market participants must track these updates closely to reassess credit risk. The watch highlights uncertainty but also the potential for a rating revision in either direction.
On the capital raising front, Utkarsh Small Finance Bank plans to raise up to Rs 500 crores through unsecured subordinated, redeemable Tier 2 bonds as non-convertible debentures via private placement in one or more tranches during financial year 2026 to 2027. Meanwhile, Bajaj Finance accepted bids totaling 13.90 billion rupees for its bonds maturing in September 2028, with a coupon rate of 7.07% reissued at a yield of 7.80%, carrying a AAA rating from CRISIL and a tenure of 2 years and 3 months.
For Utkarsh, this move strengthens their additional Tier 2 capital, improving their capital adequacy ratio, which is vital for regulatory compliance and growth. For Bajaj Finance, this successful issuance confirms continued robust access to debt markets, with investors attracted by high credit quality and competitive yields. The issue size includes the base amount plus any greenshoe option exercised, allowing Bajaj Finance to raise additional funds if demand exceeds expectations, which it clearly did.
Sterlite Technologies secured shareholder approval with 99.98% votes to raise capital through equity, debt, qualified institutional placement, external commercial borrowings, and convertible securities. The vote involved 28 crore 89 lakh 39,300 votes out of 48 crore 81 lakh 32,538 total shares, with promoters giving 100% support, a strong signal of confidence in the company's strategic plans.
High promoter and institutional backing signals stability, reassuring investors about governance and the company's growth outlook. This diverse fundraise supports both expansion and debt management, improving financial flexibility. Such overwhelming promoter and public institutional backing should positively influence investor sentiment and the company's credit profile going forward.
Shriram Finance reported a standalone turnover of rupees 48,177.98 crores and a net worth of rupees 65,244.09 crores for fiscal year 2026, with over 3,200 offices and 76,000 employees. However, customer complaints jumped from 51,271 to 81,159, likely due to increased digital use and better grievance awareness, and they also paid a minor penalty of rupees 0.027 crores to the Reserve Bank of India.
Investors should watch how Shriram balances growth with addressing operational risks, especially the increased grievances and regulatory compliance in digital lending. They also aim to grow their green finance assets under management from 1,400 crores to 5,000 crores, reflecting a strong ESG focus. Balancing this green growth with customer service improvements will be key to sustaining their strong market position.
NXT Infra Trust's board approved raising 55,000 million rupees through borrowings and issuing 227 million units for 21,000 million rupees, keeping leverage under the 70% regulatory limit. The borrowings will refinance existing debt of the trust and its special purpose vehicles, with a unit holder meeting set for July 10, 2026 via video conference for final approval.
That leverage level is crucial. Staying below 70% ensures compliance with SEBI regulations, maintaining investor confidence amid refinancing efforts. Market response has been muted with 0% returns recently, and unit prices have declined around 3% over the last year and 5 years. So this refinancing could be crucial for restoring investor confidence and optimizing capital structure.
Carriage Global assigned a BBB plus stable foreign currency rating to Bank of Baroda and its $4 billion global medium-term notes program, reflecting strong government support with a 63.97% stake. The bank shows solid fundamentals, total assets of 20.092 trillion rupees, a capital adequacy ratio of 15.8%, well above regulatory minimums, and improved gross non-performing assets reducing to 1.9%.
This rating boosts the bank's appeal to international investors seeking Indian banking exposure backed by sovereign support. However, risks remain in micro, small, and medium enterprise loans with gross non-performing assets at 6.1% and agriculture at 4.5%. Monitoring net interest margins and asset quality in these sectors is crucial for sustaining the rating amid competitive banking challenges.
Several more notable debt market moves today. Samvardhana Motherson International issued commercial papers worth rupees 300 crores at a coupon rate of 7.20% per annum, comprising 6,000 instruments with a face value of rupees 5 lakh each, maturing September 11, 2026. Union Bank of India plans to raise up to rupees 8,000 crores at its July 10, 2026 AGM, maintaining a strong capital adequacy ratio of 18.02% under Basel III norms, alongside a proposed dividend of rupees 5 per equity share for fiscal year 2025 to 2026.
Samvardhana Motherson's listing on the Bombay Stock Exchange and issuance through Kotak Mahindra Bank adds market credibility. With over 42% returns in 1 year and over 61% in 5 years, this short-term funding aligns well with their financial stability. For Union Bank, the capital raise supports business expansion and Basel III regulatory compliance, and management changes at the AGM, including a new managing director and chief executive officer, will be closely watched as they influence strategic direction and market confidence.
Foreign portfolio investors poured a record 33,000 crores of rupees into Indian government securities in June, a six-fold jump from May's rupees 5,512 crores following June 5th reforms, removing short-term limits, merging general and long-term investment caps, and eliminating the 12.5% capital gains tax and 20% withholding tax on interest. The Reserve Bank of India continues to oppose offshore settlement of sovereign bonds via platforms like Euroclear, insisting foreign investors use the domestic negotiated dealing system order matching platform to consolidate liquidity and improve price discovery.
This surge reflects previously sidelined funds now mobilized by policy changes, supported by a stable rupee and calmer geopolitical climate. Financial technology firms like MarketAxess have created tools linking directly to the NDSOM platform, enabling seamless trading for foreign and domestic investors. Inclusion of Indian sovereign debt in major global indices, the JP Morgan Emerging Market Bond Index and the Bloomberg Global Aggregate Index, plus ongoing talks with the Bank for International Settlements, could further boost foreign investment stability and diversification.
Wrapping up today's episode, HDFC Bank raised $750 million through a 5-year dollar bond at a yield of 5.067%, tightening from initial guidance of 120 basis points over US Treasuries to 90 basis points due to strong demand. The all-in cost of funds, including the RBI's subsidized hedging discount, is around 7%. Tata Capital's board approved raising up to Rs 36,000 crores through non-convertible debentures via private placement, posting a consolidated net profit of Rs 1,502 crores in Q4 fiscal year 26, a rise of 42.8% year-on-year. And private sector banks in India are set to lead earnings recovery with a compound annual growth rate of approximately 21% between fiscal years 2026 and 2028, nearly 3 times the 8% projected for public sector banks.
HDFC Bank's issuance reflects robust investor confidence, and merchant bankers expect external commercial borrowings via this route could attract between 15 and 20 billion US dollars in the next 6 months. For Tata Capital, the flexibility to issue secured, unsecured, subordinated, perpetual, market-linked, and green bonds allows them to adapt to market demand. Solid earnings and diverse lending products make this large issuance attractive to investors. And on the banking outlook, improving asset quality, strong balance sheets, and easing net interest margin pressures are key contributors to the sector's positive long-term prospects. That's all from the DebtCircle podcast for today. Stay tuned for more updates.